Right, guys, welcome back to Hitch's Markets, and today we're going to be doing a breakdown on Canadian dollar versus Japanese yen. And I thought this is a really nice example to share with you guys how supply and demand works, and how actually we trade supply and demand. And so, without further ado, let's get into it. As you can see, we have the chart opened up on TradingView, and the overall trend. First thing I tend to do is find what the trend is, because we always like to trade with the trend. So if I go on the 4 hour time frame, you can see the trend is bullish, and so we'll be looking for some buys. And so if you're on the 1 hour, you can see the price has done right is the price has consolidated here, which must have been the Asian range. And what happened? The price then broke, coming down, and when I got to this point over here, this is a very big candle. This must have been when the CPI news came out about 2 weeks ago. And as you can see, price reacted off this zone very nicely, and then it went with the trend, which is overall bullish. So we could have bought over here. But now, as you can see, the price then came back to this supply zone. If we mark out this zone here, which also fits nicely with the 4 hour, price reacted off this very nicely and is now going in the opposite direction. It's going for sells. So in a situation like this, what we'll do is we'll find our demand zone as we're looking to buy. So as you can see, there's a very nice imbalance, and inefficient price action has taken place. So what we'll do is we'll always try to find the candles before this, and you can see multiple candles like these forming over here and also over here. This is a good indication or for like us to find the right zone to enter off of. So if I were to mark out this area over here as our demand zone, just change the color of this. So red supply, grey is always demand, and this fits nicely with the colors of the charts as well. So this is how I like to lay out my charts. Anyway, so as you can see, we've identified some demand zones, and there's another demand zone sitting right over here. If you do go on the 15 minute, it does overlap with the 1 hour. But how would we know which zone to like choose? Whether we want to enter over here, whether do we want to enter over here? So how would we actually know? So as you can see, there's a lot of indecision candles, or you can also say consolidation on a lower time frame. But just for now, keep it simple. And this is indecision candles over here. Some more indecision candles over here on the 1 hour. The fact that this is a better order block than this is because price, given order block, went up and came back to the zone, retesting it before shooting up. And all we now have to do is wait for the price to retrace back into these levels, and then we can look for some longs. Now finding the best level, if you go on the 15 minute, you can see, as you can see over here, the there's a really nice indecision candles or consolidation, leaving us a very nice order block over here. Same goes with the 1 hour time frame. So these both zones are good. You can enter either from here or from here. But however, you can see the price is has reacted off of this and has failed to give us a break of structure. So we now need to identify the change of character, which will show us the price is still in an uptrend. So as you can see over here, price broke this high over here, giving us a change of character right over here. And if you mark out this zone over here instead of that one, this is the zone we're going to be targeting. We have three bearish candles over here, which this means this is our order block for the supply zone. So just mark this out. This is the area we're going to be targeting, and we just have to wait for the price to come down over here. But which zone are we going to enter off of? The price, what could price could possibly do is not hold this, come straight down, targeting some imbalances over here. But this is very unlikely for it to happen. One, the price is an uptrend. Second, we haven't had a proper change of character, showing that the trend is now a bearish trend instead of a bullish trend. Because as you can see, the high over here, so this high over here created this low. So if price breaks this low, this will give us a change of character. But if the price does not break this and reacts off this zone, then we can say the price is reacting off of this massive candle over here, as it already has reacted here once. The price will come, retest this, and then if you go on the 4 hour, the reason I'm not going for sells is because there's a lot of imbalance sitting over here, which we could potentially target on the 4 hour and look for some longs. We will only enter off aggressive if the demand zone is mitigated during the London or the New York session. Otherwise, we will not enter. We will wait for further confirmation and then we will enter. And to find the best zone, what we tend to do is we get our Fibonacci tool, we mark the low, the last swing low to swing high, which will be this level, but just to be more safe, that's the highest point there. So you can see the level which we call 0 is basically the highest and 100% is the lowest. 50% is halfway, and we would never want to buy at halfway, because we always want to either buy at a discounted level or a premium level. If the price fits in within the 70 to 78%, let's say this order block over here, if we get rid of this one, you see this order block fits really nicely within the 70%, the 78%, and so this is what we would call a discounted demand zone, and this is another confirmation for us to enter off this zone instead of this one over here, because this is a better entry as compared to this. But if the price does not hold, we will wait to see if the price holds this zone, and if it doesn't hold this either, then we'll see if we get a change of character, and then we can look for some sells. But the overall trend is bullish, so we want to trade with the trend. And if we mark out let's say we are targeting this area over here, more stop loss to the bottom of the demand zone. We would like to enter off either the London or the New York open. We will wait for the price to slowly make its way to this zone. If it happens in the London or the New York, we can then enter aggressively and target this area over here, even further up, but this will be our take profit. And this is roughly 80 pips, so this is a nice setup. Therefore, why not share it with you guys and show you how supply and demand works. So all my trades that I take are in a similar setup, and for better entries, you will always want to find the order block or your zone which fit within the 70 to 78% of the Fibonacci, and not always will it bounce off that zone, but overall, let's say 60 to 70% of the time it will. And what we want to do is set your stop loss at the bottom and target the top of your supply zone in an uptrend like this. So hope you like the video, and yeah, just stay tuned for further content like this. Thank you.